Well, hello and welcome, friends. I hope you're doing great. My name is Sat. Those of you who know me, you know that I love educating clients about real estate and mortgages. As a matter of fact, one of my passion is to ensure that people who are going through the real estate or mortgage transactions, they have all the information up front without any obligations, without any commitments of sorts, and without any sort of fear of being taken advantage of or being given information that isn't quite right for them, and so on and so forth. I love my industry of real estate and mortgages, but I'm also aware that unfortunately sometimes, not all the time, but sometimes people do get taken advantage of, especially when they don't know the whole story of the industry or whole story of their situation. I've also seen many times people losing out on opportunities because they didn't think something was possible for them, when in fact it was very possible for them, and they waited 3, 4, 5 years waiting for that right timing for things to become possible. And in that wait period, they lost opportunities, which they still capitalized on a later time, but 4 or 5 years later in real estate could mean that same opportunity being $100,000 or $150,000 or $200,000 more expensive. So my goal always is to make sure that people are not being taken advantage of, and two, they are not being held by beliefs or thoughts that are not true. In this podcast, we're going to talk about people with not so perfect of a credit. Here is a common belief out in the market that in order for you to go buy a home, you have to have absolutely perfect credit. You have to have absolutely pristine finances, and you absolutely have to have full-on sort of like plethora of other things, as in down payments, financial knowledge, incomes, and so on and so forth. Now, some of that might be true depending on your situation, but there are also things that could be worked around. One of the things I find that people who are not fully knowledgeable in the real estate and mortgage industry, they are sometimes scared to ask the question. I understand there are some fears of disappointment that could be playing a factor, as in, I know I don't have greatest credit. I don't want to really get my hopes up. I'm not even sure if I'm going to get anything. I don't want to be dreaming and only be disappointed later on. There is that fear. Sometimes the other fear of opening up your life, opening up your privacy to somebody, and they're taking advantage of you or them taking advantage of you, that fear could be there as well. I find people who are not full on sort of like up with their credits and so forth sometimes do get taken advantage of people, because people who serve them sometimes know that they're in a situation where they probably don't know as much. So sometimes that information given to them is half-baked, etc., etc. And I'm not saying that happens all the time. Please don't hear it that way. But that happens every now and then, and we hear stories about that. And that happens enough times out there that almost every one of us have heard a story or two like that, and that could put fear in your thoughts, in your mind, thinking that because you don't have you don't have perfect credit, that could mean you could be vulnerable to one such thing if you opened up your books or your life to somebody. And I think the third factor in there is also lack of understanding of the industry as a whole. I think lots of people get information about the industry like a piece of a puzzle that they fit in. As in, if I wanted to buy a house, let's say in Abbotsford, is where I live, then all they're focused on is finding a house in Everswood that works for them. Well, looking at the whole puzzle instead of just a piece would be, what if we could look at places like Chilliwack, Mission, Aldergrove, Maple Ridge, Langley. What if we could expand to next province to BC, like Alberta? What if we could go to Saskatoon, Saskatchewan, right? What if we could open up all those possibilities from all these different areas and not just look at one type of residential property? I'm sure when you look at such a large canvas, you usually end up finding something out of that bigger space that will fit and suit you. Not to say that you should make a decision like that one way or the other. All I like to do is present you with some options. And you know what I've seen? Almost 7 out of 10 times. When people are presented with right type of opportunities, right type of options, right type of guidance and help along the way, with understanding and empathy of their situation, 7 out of 10 times it works out for them. And they end up being in home ownership and start building equity and clean up their credits and so on and so forth. If you're listening to this podcast, the chances are you may have gotten it from a friend who have dealt with us before, or somehow, some way you got connected to us, because 80-85% of our business today comes from referrals of people we have helped before. So your friend or colleague who you got this podcast from might be one of those persons who have received that help from us and can tell you more about how we can help. The point is, a consumer, a client by themselves know very little piece of information compared to what an expert or somebody like us who works in the market day in, day out would know. And because we know a lot more, we see a lot more, usually we can bring in solutions that you yourself may not even have thought about, or may not even have considered, may not even know that could be available to you. So that's the mindset that we come from. Our goal is to educate people about how mortgages work. So in this quick podcast, I want to talk about 5 key pillars that make a successful file and how they go through. You want to pay close attention to it, especially if you have less than perfect credit. So every file, every mortgage have 5 pillars in it. Pillar number 1 is down payment. Down payment is the money that you are investing. Whether it is 5%, 20%, whatever is required. Down payment basically gives banks security, knowing that you are not just using their money to borrow, to buy a property, you actually have some skin in the game. Down payment also shows your ability to save and source funds from outside of the bank. So not only bank finds security in down payment, they actually get to see your ability to save, source out funds outside of them successfully. That gives them great sort of like feel that, okay, this person have some ground under their feet. They're not just kind of flying high trying to buy a house. Down payment is one of the pillars. Second one is your credit. I'm going to make it but it's a truth, it's very close to the truest revelation you'll probably hear. About 80-85% of the files we see today, there is some sort of a blemish on the credit of applicants in there. I'm not saying every file is that way. Every now and then we'll see a file that is perfect. But more often than not, we see challenges with the credit nowadays, especially what COVID has done to people and families' lives over the last couple of years. A lot of people are in that phase. So if your credit is less than perfect, I'd encourage you to not be shying about it, not be hesitant about it. Put it up on the table and put it in the light and see what exactly it is. Next thing after credit is your ability to make the payments. That's usually where income comes in. What is your income source, right? After that is property and its value. What kind of property you buying? Does it have the value that you're asking to borrow from the bank in it? The last but not least is your other debts. How many other debts and obligations you have outside of this home? So let's say all 5 of your areas, all 5 of the pillars on your file are 85% or above. Then your file would probably be good fit for what we call is an A lender. If 4 of those pillars are perfect, 1 is not so good, you may still qualify through the mainframe lending through a B lender. And if, let's say, 3 of those pillars are good, then you may still qualify for a file for a mortgage through a private lender. Now, one of the things we also do, let's say 3 pillars are really good on your file, 1 is kind of close to being good but not as good right now, then looking at your file, we can usually guide and coach you on how to make that pillar good so that your file could move up a scale. But we have noticed a lot of time people are only 1 or 2 quick things away from taking their file from looking bad to looking okay, right? Or from looking okay to looking really good. Just 1 or 2 quick things you can do to fix a few things here and there, and we can guide and coach you on that, okay? So, as you can see in this short podcast, I can only fit so much information, but there are lots of possibilities for those who do not have as good of a credit, or may not have as good of an income by themselves, or may not have a full down payment saved up in their account. There are multiple ways to go about fixing every one of those areas. If you have been thinking about looking at a property but are struggling with any one of those areas, what I would encourage you to do is give us a call. Let's do a quick coffee, a chat over the phone, maybe a Zoom meeting depending on where we are located. And let's take a look at your file completely with full on openness, full on honesty, without you signing any papers, without any commitments, without any obligations of any kind, without any pressures of selling or buying or anything like that. Let's take a look at your file and see what's possible. And if there are things possible, we'd love to suggest you those things. And then from there, it's totally be up to you if you would want to take on those suggestions or not. We have helped a lot of people go through being a property owner while they did not have good enough credit. I think one of the greatest opportunities of doing things this way could be explained in cost of opportunity. One of the big concerns with people who have less than perfect credit is, what would it cost me? Would it cost me a lot more if I did my mortgage? Because that's what we hear from the banks or other sources. And the chances are, yes, it will probably cost you more having not perfect file. But let's say it does cost you more. Let's say it costs you 30 grand more, 40 grand more. I don't know. I'm just throwing a number out of the air here, right? Let's say it costs you 40 grand more compared to somebody who has greater file than you. Well, if you did not do something with it now and you waited for your credit and file to be great so it doesn't cost you 40 grand more, by the time you're going to get to it, properties are going to probably go up 50 to 60 grand more or 70 grand more. And now they're out of your income qualification. It's sort of like you fix one area, then the other one goes out of the way. You save up 30, 40 grand this year, properties went up 50 grand. It's sort of like you're like chasing something that's going to keep on moving ahead of you. So what you rather do in that type of case is do something now, put an end to the moving market, and then over next 2 or 3 years, fully situate yourself into the ideal type of property ownership. It may not be perfect at front, and quite frankly, it may not even work for you up front, because it doesn't work for every case. But let's say if it could, wouldn't it be great to look at that option and take advantage of that opportunity if you could, right? So I believe in possibilities. I think there is greater things for you in the future, and it's up to you to go grab them. Take care. Bye for now.